Hello, my name is Phil Marion. I'm the managing director of the Foster Family Office, focused on investing in alternatives. Welcome back to my renewed series, interviewing alternative asset strategies, where we share insights from managers who are active allocators to private market alternative investments. Through the series, we hope to share actionable insights from some of Canada's leading alternative allocators on their experiences participating in non-traditional investment opportunities. On today's episode, I'm joined by a special guest, David Vankka, President, CFO, partner, and portfolio manager of ICM Asset Management. ICM is a leading Canadian independent asset management firm that provides alternative investments to institutional clients and Canadian families. While serving many crucial roles at ICM, we will be discussing David's role as portfolio manager of Crescendo Music Royalties Fund. Welcome, David. Glad to have you on the pod today.
Thanks, Phil, and thanks to Foster and Associates for having us today. Good to
Absolutely.
see you.
Good, good. Let's kick things off with your background. We'd love to learn more about you, your practice, and generally the story that led you to where you are today.
Sure, thanks. And you did touch on ICM Asset Management as well. So we've been in business since 2003, over 20 years. And as you said, we're an alternative asset manager. And the core of the business here was really real estate investing in North America through different asset classes there. But as sort of managers of real assets, we're interested in other opportunities in the marketplace. And that's kind of where music came in. And my historic background, I've spent time studying for all the letters, the CPA, CFA, etc. Most of my life has been in finance, over 30 years, and on the trading side, the M&A side, as well as on the private equity and wealth management side, leading us to where we are today. And music was definitely an area that was interesting to us, and I think we were reasonably early on moving into that space as a firm.
Great. Well, now that we're on that topic, let's talk music royalties. Talk us through the genesis story of your entry into music. What motivated you to begin allocating client capital to the strategy, and how did you ramp up in the space?
Sure. Probably about 5 or 6 years ago, got interested in the idea, and I've always had a deep passion for music and never had any talent to play anything. Tried, failed, gave up on guitar a long time
Same
ago.
here.
Yeah, but going through it, it was kind of an emerging time in the space where we had gone from an era, going back sort of 20 years, where we had music piracy and really a declining industry to an industry that was growing. So a few things kind of led us in that direction. Definitely the rise in streaming was a trend that we thought was going to absolutely continue, and we were starting to get more information about ability to monetize that space that we didn't have before. And then, our investor base, when we started this, there's a few characteristics of it. Portfolio diversification is a big one, and a lot of our investors just talk to us about, how can we find some assets that maybe aren't as correlated with the equity markets or the bond markets, and this asset certainly fit that in a lot of ways. And when we started, it's different now, but when we started, interest rates were also very, very low. So there was a high demand for alternative yield to the extent you could find it. And, we kind of view this as both yield and growth, growth coming from the rise in the industry as well as new platforms, and yield coming from the cash flow off the investment. So you rolled our sleeves up and we're able to start acquiring assets fairly early on to gain that exposure and experience. And now we're over 4 years in with the fund, and we've been happy, and our investors have been happy with how it's gone.
Great. For many investors, investing in music royalties has never been an option, so the knowledge is low to none.
Sure.
Can you discuss how investors make money in music royalties? Like, what are producer rights? What are mechanical rights? How does the flow of funds work?
Yeah, that's a great question. And at the top level, when you think about it, you've got this intellectual property or copyright. So effectively, when somebody writes a song, or a group of people writes a song, they've actually created a copyright even before they go and register it, say with the U.S. Copyright Office. So that is their work. And then the second thing that happens is, okay, after a song's been written, somebody records it. It might be the same people, it might be different people, or different band. And once that's recorded, you've got this second copyright. So when we think about music, there's two halves to it. There's the writing of the song, and then there's the actual sound recording. And writings of a song happens once. Sound recordings can be made several times. You can have re-recordings. You can have covers, obviously, and all the way through the piece. And when we talk about the different kinds of royalties that are within that, when you think of an actual recording, you not only have a band and different people in the band, but you may also have someone who produced the album. You may also have a manager. You may have a sound engineer, and other pieces along the way. So every time a song is played, oversimplifies it a little bit, but think about it this way: every time a song is played, there's a small royalty created from that song, and that flows up to these two halves of the copyright, and to the people who own these copyrights. And the different ways the music can be monetized is, I mean, streaming's obviously a really big part of the market these days, and continuing to grow. But when you think about licensing music into a Netflix video or a commercial or any other type of video content, there can be royalties that are created from that, both from the licensing as well as the actual playing of it every single time. Public performances, radio still holds a place, both terrestrial and satellite radio. So you see these different revenue sources, and all of a sudden the pie is continuing to grow, and then that money flows down the pipe to the underlying investors. And the interesting thing about streaming, where we're really bullish still on the growth, is a lot of the streaming revenue tends to flow to the owners of the sound recordings more so than the writers. But at the same time, historically, the writers, and composition side was of more value because, again, you could make many, many copies of each of these. So there's still starting to be a relationship with those that's narrowing. And the last part of it is you've got these different platforms that have come out. So one of the growth areas in music has been, new technologies that have driven new consumer behaviors. And TikTok is not that old. The fitness trends still continuing, and even though Peloton share price may not be something you want to touch, a lot of people are still using Peloton or other fitness
Yeah.
fitness apps and things like that. Gaming's another area where that wasn't a big part of it before, and we're seeing music being licensed into games and other parts of social media. I think Twitter's the one, or X is the one that has not been licensed yet, so there is a lawsuit going on there between a lot of the music publishers and X. But as time goes on, these platforms have to properly use music, and a lot of times when they started, they didn't realize that. So I think it's getting better from that perspective. And the way we look at it, and some others do, is there's going to be platforms we haven't even thought of yet that we're all going to be
Yeah.
using in 5 years. That's going to have to do the same thing. So there's some pretty exciting growth opportunities, and some more predictable than others, I think, for the industry.
Can you give a quick, just sort of analysis of how revenue is broken down from, say, Spotify? Like, how does Spotify determine the amount of money to pay to the music right holder?
Yeah, I mean, okay, there's a couple things that go on there. A Spotify or a DSP will take, say, a 30% cut off the top. But what happens is they set their pricing, and in Spotify's case, there's also advertising, but there's a
Yeah.
pool of money that goes into this, in the writer's case, called the all-in royalty pool. And then from people's subscriptions, or from advertising dollar, this money flows down the pipe, between the two different types of copyrights. And as that's a streaming service, more of it will go to the masters or sound recording side. But within that, there are a couple groups that will be distributors or administrators, distributors of music in the case of the sound recordings, and there's performing rights organizations and music publishers in the case of the copyright. So they'll be assigned to collect this money. There will be a fee that they take along the way. and then ultimately it flows down to, the owner of the underlying sound recording or the owner of the copyright. And one of the things that means for us, for people who don't look at the space, is that we don't have to go to Spotify directly to collect, nor do we have to go to Spotify to negotiate rates and things like that. So in the middle, there's a distribution arm, or for a songwriter, there's a performing rights organization. It's SOCAN in Canada, and there's four of them in
Okay.
the United States. And that's their whole task, is to sort of collect these royalties over time. Uh,
No, thank you for that. Can you discuss what goes into the purchase of a song or catalog? How do you value the music, and what do you look for specifically when deciding to purchase?
Sure. It's a foreign area if you haven't looked at it at all. Again, coming from sort of an investing background, you can start to narrow it in with some of the same fundamental processes. So, what we try to do is we try and, like any other asset, we try and predict the cash flows out over time. What do we think this is going to be doing, for the next 5 to 10 years, and what goes into that. Now, the difference between this and some other assets like real estate, you can draw a box around how big it is and
Yeah.
approximate rents and everything else. In theory, this can be infinite or zero. But there's some other factors and predictability to it. So what typically happens is if something is older and established, and you see the headline catalog deals being done by the likes of, Queen and Springsteen and Neil Young and everybody else along the way, those have a very long history to them, both in streaming as well as in other sources. And it becomes easier to predict how that asset's going to behave, based on it's on a lot of playlists. It's people are already listening to it. So the range of expectations gets quite a bit narrower. If you start talking about newer music, one of the things we're trying to find is not trying to identify who the next talented artist is going to be. There is an A&R business for that, where you can sign artists, help build their careers, help market them, and help grow them. We're looking for artists that already have some track record or history to it. And when you think about a song that comes out on a radio that's a new hit, it'll get a lot of promotion, it'll play a ton, and then ultimately it'll fall off your top 40 or your top 200 charts and get played less. But then it'll have some stability to it. So we're trying to find catalogs of music and songs that have kind of reached that stage where there's some predictability to it, and we're comfortable buying older artists, but on the newer artist side, we wouldn't buy anything that's under a few years old. But really, 5 to 15 years is a sweet spot. And if you think about 5-year-old catalogs, there isn't perfect stability to them by any means, but the pricing usually reflects that, and there's usually some pretty decent opportunities in that space. The much older catalogs, again, the bandwidth of expectations tends to be narrower. So we try and forecast these cash flows out, and then we look at other factors that are happening. Is it still an active artist? If they're collaborating with other artists, and you see artists collaborating across genres now, that helps out a ton, getting attention to it. If they're going on tour, releasing new works or new albums, if we can call them albums anymore, that also
Yeah.
helps the older catalogs for a while. So those are some of the things we look at. We look at, trends in social media, trends on playlists, you know, geographic consumption, and obviously, the more important thing is, how much has it been paying the last few years,
Yeah.
and how old it is. Those are the big drivers of it. And then we try and establish, um, it's not perfect, but we try and establish growth or decay rates as a starting point based on, again, the age of the catalog and the quality of artists they are, meaning how well known they are, I guess. And so we have a framework to do that, with appreciation that you're still forecasting some uncertainty. But so far it's been going reasonably well. And then we think about actually purchasing it. I mean, these have to be available. So all these deals are generally one-off transactions where someone is selling some portion of their life's work. In some cases, it's, like giving up their kid. In other cases,
Yeah.
very practical about estate planning and growth and things like that. But it's generally an industry where people don't start working on music with the intention of thinking about long-term financial planning. So there's different emotions, there's different levels of expertise with the sailor, and there has to be some availability of the catalog. So you have to have a willing participant who sort of sees the value proposition of either diversifying their own investments or taking some of that money and reinvesting in their own career versus being completely beholden to a record label or publisher because they took more money from them up
Yeah.
front in way of a loan is what that really is. So that's kind of how we evaluate the whole space.
Well, it leads nicely into my next question was going to be, how do you even get these opportunities in the first place? We see there's certain artists in the catalog, in your catalog right now, like John Legend, there's old Taylor Swift music before she re-recorded it new, but how are you getting in front of these opportunities and assessing the availability and whether you can purchase them?
Yeah, it's been a network build for quite a few years now, including even before we launched the fund itself. And I think with COVID, there was a bit of an acceleration of that too, because that network could get built pretty quickly versus having to always be flying somewhere to go see people. But now we're at I think, a very sweet spot. We've acquired over 25 catalogs. We have a lot of different groups showing us opportunities in various levels of sophistication. And then the community of lawyers and business managers and others who work with the artists as well tend to be fairly tight and know each other. So we start to see opportunities as we go along. And we've been, I think, developed quite a good reputation for closing when we say we're going to close.
Yeah.
We haven't walked away on any deals unless there's a due diligence problem with something, and that helps a lot as well. And we try and do a lot of the upfront work, perhaps putting fairly detailed terms in front of the sellers early so that there's less negotiation, 60 days out when you're trying to close the actual catalog sale. So that's helped us, I think, immensely. And then there's word of mouth and referrals coming from people we have dealt with along the way. And that's really important to us to keep that intact.
Are you seeing a lot of increased competition for deals? You're now being included based on your experience in closing of deals with more catalogs. What's the environment like there?
I think the competition there's a little bit of a barbell. So I think at the very top of the market, and even since we've started, pretty much all the major private equity or private credit shops have moved in. The KKRs, the Apollos, Brookfield, even Vimco, a lot of the other ones. So they have to do deals that are really several $100 million in size to even come close to moving the needle, and they don't typically or even at all run dedicated funds. They have it in an alternative income or special situations strategy. So we're not competing with them on the $200 million deal, which helps us a lot. I think some parties have pulled back a little bit because of interest rates, but others have entered because of the growth in the underlying market, and double-digit growth in the streaming market has more than offset that. We're also getting some first-time funds, thinking about selling and then
Yeah.
re-upping in their second fund, so they've got a monetization event. So the major strategic buyers, which include Universal, Sony, and Warner and their subsidiaries, we're partners with them on a lot of things in terms of distribution and everything else. They're occasionally competitive on catalogs where they want to own pieces of the copyrights themselves for a bigger purpose with what they're going to do with that. And you've seen recently, Sony bought Queen's catalog, which is an example of that. But there is some competition, but generally, generally we have not been the highest bidder in the room, and we're not seeing. Uh, for a little while, we were seeing people put out, I thought, really aggressive pricing on some of these catalogs, and I think we're getting to a more normal state now. We haven't seen much of a pullback in multiples, but I think we've seen sort of a a steadiness of where we are with a healthy dose of reality with what the environment is for these kind of assets. Yeah.
What's the, I mean, what's the overall growth like in the space? Are you seeing more of the trends that Latin music or music from Europe or overseas is growing more than North America? Can you comment on that?
Sure. Well, I mean, you see the success of K-pop out there, so
Yeah,
that's a telling sign. BTS goes to LA and sells out 4 shows at SoFi with whatever
yeah,
80,000 people each in them. Latin music's been. I think what's happening is there's a democratization of finding music. So regional music
okay,
is now expanding to the rest of the world. So Latin's a great example. Latin's been the fastest growing genre over the last couple of years, and it goes well beyond the Bad Bunny and J Balvin's who sort of lead the way there. And you're seeing that being consumed all over the world, and not even just in Latin speaking countries. So that part of it is a positive. I think we're going to see those trends continue. I think there is growth coming in other markets. So, streaming is growing on a double-digit basis for sure. The U.S. you think would have some saturation of it, but it's still growing at a very
yeah,
healthy rate, albeit slower than the rest of the world. So we're kind of continuing to see that growth. And then there's other markets, even developed markets like Japan, for example, still buys a lot of physical CDs. So they're still in a transition
really?
to streaming. Yeah, I know. I know. So consumption habits are quite different, and then the international growth is high. And yes, people are going to pay less for their Spotify subscription in India than they are in the United States. But population growth aside,
Yeah,
there's a lot of growth in these markets and a lot more smartphone adoption. So, and what that's led to as well is pricing increases. So this is the first time, over this past year that Spotify's ever increased prices. And, there's the volume side, but there's also the price side. So, we don't underwrite it this way, but we're of the view that there isn't much elasticity in pricing and that your music DSP could be priced a lot higher than it currently is, and we still wouldn't cut them off. Video might be
hey,
different because you got multiple sources, but music, I think everyone's going to always have one.
no, I mean, they've increased, Spotify's increased my payment twice, and I don't care. It's something
Yeah.
that I'm going to continue to pay for, and I think it's a great deal relative to if you're cutting back on expenses and you have Netflix, Amazon, Disney, you're probably cutting two of three. So,
Yeah, yeah. It's it's
yeah,
it's it's
good
less than a
point. Good,
yoga
good.
class or less
Yeah,
than 2 lattes, right?
yeah. Back to sort of so there's the increased numbers of streaming globally, and the strategy focuses on income distribution. So I'd assume there's a ton of payments from different sources. How do you manage this? How do you know you're getting the proper distributions and they're correct?
Yeah, well, there's a lot of data upload. So yeah, a couple things I think from a common sense level, there's been slippage in that industry historically, and in some cases they don't even know where to pay.
Yeah,
In other cases, they might be just simply utilizing the wrong rate. Well, we're supposed to pay this artist 18% and we're paying them 12. So until you audit it and things like that, you don't know. All you know is you're not being overpaid. So I think because we and others will look at historic numbers, you feel pretty comfortable that over time technology is going to also help reduce that gap. And there's companies that are already helping in terms of being able to audit these streams and things like that. But when we ingest it, the nice thing about having a distributor or performing rights organization or publisher in the middle is that they collect those payments, and we'll get it twice a year, 4 times a year, or monthly, depending on who it is. And with that, we'll get, you know, a single payment from a particular source. Now, there might be 1,000 pages of documents behind it that says how much did this earn in, uh, pick your country, in Indonesia on iTunes or Apple this past year. So all of that aggregates up into one number. So the collection side is straightforward. You have to make sure that the counterparties are paying you the right way, obviously. But once we have that, the data ingestion becomes much more for managerial and planning and evaluation tool versus having to collect each individual chunk of money along the way.
Okay. Um, I'm interested in hearing about the if your strategy or if anything's evolved since the start. I mean, what's the current AUM in the fund now?
We'd be pushing around 140 million in the fund, I think.
So you're
And
around 140, and
yep,
you started
zero.
in the low tw yeah, you started at zero, ramped up quickly. So has anything evolved? What key lessons can you share through this process of investing in music?
Yeah, a few things. The regional music explosion that we talked about is actually a big one. So you're starting to see growth of different kinds of assets as people can discover all kinds of music in a way that they couldn't before. We're certainly targeting some assets in those genres. We've done a couple of Latin catalogs as an example. I think as we've built this out over time, an important consideration for us is onboarding complexity, willingness of client to sell, because certainly if they're not willing to work with us or another party, it can definitely waste some time. And we've seen people testing the water in some cases along the way, thinking they're Bob Dylan and they're not.
Yeah,
So we see those sorts of things there. It's a really fluid industry in terms of the regulatory dynamic and other things. So uh, it's nice that we start getting paid very quickly after we acquire catalog, but spending a lot of time staying abreast of what's happening with the regulatory environment, what's happening with the Copyright Royalty Board in the U.S. So there's what's happening with the battle between how much DSPs should receive versus songwriters along the way. So those are factors that can ultimately affect our revenues, and some we can or some we can't control, but we just have to be conscious that there are the Copyright Royalty Board, which basically decides how much of the pool goes to the songwriters. It's a small group of judges who make those determinations after hearing the cases for both sides. And fortunately, that's been increasing. And you know, I think most of the world would rather see the artist earn that versus Amazon or Apple or Spotify or another one of these corporations, which is just
yeah.
fine without that. So those things are happening, I think, in the interest of fairness, but it's definitely an evolving and not a static space for sure.
Okay. Well, one more question. Just want to wrap it up here. This is
Sure.
more just in terms of wealth allocators such as myself. Uh, what type of advice would you share with them based on this experience of how you would allocate music royalties into a portfolio? What are you seeing advisors do? What are you seeing individual clients that might come directly to your fund? What would you advise?
Sure. I think with any portfolio and obviously Foster's doing this with their clients, you have to look at your whole asset allocation and you start with where you are in life and where your time horizon is and your needs and this ranges from pensions all the way down to individuals. And we're finding and certainly believers in a shift to more and more alternative assets in a
Sure.
portfolio, or really to provide that diversification. And we've had several periods of big drawdowns where something like music hasn't had any. It's continued to plug along. We've got equity markets strong again now, but it's concentrated as we all know. So you're suspect to valuation changes and things like that. So as part of that long-term plan, if you've got an alternative bucket, um, I think most clients should be invested across a few different assets, certainly not just music, certainly not just
Sure.
real estate, certainly not just private credit.
Sure.
But I think that, I think the real things that drive this, there's growth in the space. It's the most diversified asset we've seen. You don't have
There's no
operating,
correlation,
there's
zero
no
correlation
zero
to most
correlation.
strategy. Yeah.
Yeah, yeah. So something sized appropriately within a portfolio, whether it's 5 or 10%, or pick your number, seems to make a lot of sense. And then we've had an increasing interest for sure because it's getting better known out there. You're seeing more headline transactions out there. You're seeing all the big players getting involved in the space and pensions doing it. I mean, the reality for the big pensions is this isn't a $10 trillion industry, so there's limits to who can do what in that space, and every transaction's individual. But it fits with a really, really long life asset
Yeah.
for what they're trying to do and trying to accomplish. So those are some of the characteristics, and also people like to talk about it. So it's
They
it's
always
fun when they
do.
go home to
That's
the
good.
dinner table. Yeah, yeah, for sure. So I think there's been definitely more acceptance of the strategy as a whole, and it's continued to perform. And just with more information out there, I think people are getting a higher level of comfort. So we're certainly seeing growth from wealth managers trying to access or interested in accessing the asset class in recent years, for sure.
Great. Well, David, thank you so much. That was great. I'm glad to share more info on such a great asset class, and thank you again.
Yeah, thanks, Phil. Really appreciate it. Take care.
Take care.